Traders, welcome back to another price action trading lesson. We're looking at S&P 500 MA futures. The time frame is 2000 tick chart. Today's session opened with quite a decent uptrend working higher. Before we're gonna analyze this chart, I want to talk briefly about this thing right here. This is spike in volatility because it was created by the news. The reason why I am worried about this is because it's making me question the validity of this uptrend, whether this is legitimately a healthy uptrend or not. Because if we can see such a spike in volatility, it can distort the price action, and massive spikes like these that are created by news can a lot of times be traded back shortly after. So this is one thing that I keep in back of my mind, but I do expect this price action to get new high eventually. I am still leaning more bullish because we have bullish structure. We have a wider downtrend, market open. Let's see what's going to happen. Break, push to a new extreme, downtrend played out. Okay, prices are pushing above EMA, so I'm going to redraw the short-term uptrend. And we have high low. I cannot take high low because it is so far from the EMA, not even the tail is touching it. The gap is indicating, okay, there can be additional pullback to test the EMA. We are breaking below EMA, and this is not a good sign if I'm a bull. Why prices are breaking below EMA? Why is exponential moving average not holding? So once I see this, I'm careful. We have a failed second entry short, but I don't want to take it because we broke below EMA. I would have to use double bar entry, and the spike in volatility is making me question if the uptrend is truly valid, because why this downtrend was stronger, why we broke below EMA. So I need to see push above EMA, and I want to see the high low. This is not happening. As you can see, we're going very sideways, no trigger. EMA exactly in one of these bars. This is a congestion, no trade zone. So if you're watching this and you're holding any trade, you need to exit because this is a congestion stacked area, no clear direction, no trade zone. And market right now is trending all the way down here like this. So now I have to adapt. My initial suspicion was verified, and because we retraced too far down, I'm no longer expecting this uptrend to get the new high. This is right now a brand new bearish structure, so I need to be looking for additional channel because I don't want to have these candles on a chart without a pattern. Initially I was looking for channel like this, but this feels a little bit too broad, like I may not use it anytime soon. So if I'm going to start a little bit lower, make it a little bit steeper, you can see this one looks a little bit better. It's a little bit steeper. This means there's a high chance it will come into play sooner. And you can see at the top of the move, the market geometry, all of these lower highs are allowing us to trust this downtrend. So right now, the trend is definitely bearish, but we would like to see more confirmation of this downtrend. I'm going to redraw a brand new uptrend. We're breaking higher. A small break, new high. Okay, we're getting reaction to the trend line, and prices are breaking below EMA, so this is great. I'm going to adjust the trend line just a little bit. Break a new high, and a lot of smart sellers, they're selling off of this key entry point. So this is confirming that this trend line is valid, especially if we're going to combine it with this market geometry. So I'm thinking about lower high confirmation setup because right now trading is easy. We have a trend down, so I want to take a lower high. If we're going to push too far down, I want to see second entry short. Nothing is forming, market is just plummeting lower, and we have overshoot. One bounce, second bounce. This is oversold area. I don't need any indicator. Okay, I can just read the pure price action based on candlesticks alone. I don't need no order flow. I can understand based how the structure is behaving that this is overshoot, so we can expect a stronger pullback in the opposite direction. This is oversold area. So if there's going to be second entry short at the EMA, I would have to skip, because after overshoot we have to skip the second entry short. Now in this case, we also have short-term uptrend working higher, so I don't have to be worried about getting trapped anyway, because I would have to respect the short-term trend. Remember, our goal is not only to locate the main trend, we're also following the short-term trend line rule inside of this main trend for these short-term corrections, because these short-term corrections, they're mini trends inside of the big one. So you want to see break a new extreme, and then you can resume selling. That's the safest alternative. We have a failed second entry short, which is quite tempting after overshoot because we expect prices to break the trend line. But because the trend is down, a little bit more subjective, so let's be patient. We have overshoot, and prices are breaking back below EMA. And this is important. Okay, why is this important? We have overshoot of this correction. So you already know that the overshoot can generate stronger pullback in the opposite direction. And the reason why this is so important is because we already expect this main downtrend to test the new extreme. So we have big bias, big trend that takes precedence. We expect new low to be tested. And if we're going to combine it with this overshoot, the fact it can generate stronger bearish pressure, we truly expect new low and we don't even expect new high. Now, sometimes it can get the new high, no problem. How would you confirm it? Well, you would see EMA acting as support, prices would correct to the EMA would be holding, and then prices would go higher. This is not happening. We can identify what's happening because we're slicing through the EMA like it's not even there. So I'm going to combine all of these things, the overshoot, and I expect lower high or second entry short at the EMA. None of this is once again forming, market just plummeting lower. I have a second entry short. Okay, so I have a nice pullback. So I would like to see second entry short. I want to see new low tested. Can get a second entry short? No. Second entry short and new low was tested. This low is lower than the lowest low prior to break. So sellers tested the new extreme, and now I have to pause looking to go short based on price action rules because the downtrend played out. You can see we have a second entry short. Can you take it? I cannot. We just had a break and new extreme. So just like after overshoot, I have to skip the second entry short. After there's a break and new extreme, I also have to skip the second entry short. I need to see either lower high confirmation setup or double trap because they confirm stronger bearish pressure. And now indeed we do have double trap. Uptrend played out with the break new high. It visually resembles broad to like a pullback, breaking new high, and we also have small resistance. And this is good because the resistance is giving you additional reason to trust your analysis. It's a double bar entry, but the low closed very close to the previous bar, so this is decent. More aggressive trader can consider, not a bad setup, especially if you have the resistance, but every single time you just have a break in your extreme, it's a little bit more aggressive. Barely book for a scalp, massive push above EMA. I definitely cannot take lower high inside bar. Why this double trap didn't continue to go lower? Prices are holding here, support is being established, so I'm going to redraw a brand new structure. It's really looking like the bearish momentum is dissipating because this is a bottoming pattern. Normally you can see market is creating lower highs and lower lows. Now you spike down, and instead of prices going lower, they're bottoming out. We're going sideways, going sideways. This is indication that the bearish pressure is depleting. So I was waiting here. I cannot really take anything. Breaking new high. Okay, I was thinking there can be some wider channel here, but quickly we broke back below EMA. Okay, so I'm gonna zoom back, and I can see that after breaking new extreme, we're going sideways. So it looks like push up, push down, push up, push down. It looks like we may have a trend range on our hands. So I'm going to draw a small consolidation because after breaking new extreme, you can expect correction or reversal. So it looks like we have correction. I'm going to draw a brand new downtrend working lower. I want to see second entry short. We're coming off the range highs, uptrend played out, massive spike below EMA combined with the bearish push down. Second entry should be decent. This downtrend needs to get new extreme. We already have a break, push to new extreme, no second entry short. I was also thinking there can be some wider downtrend like this. So I was also looking for second entry short, but because we only have a first entry short push up, there was no second entry short. This downtrend is invalid. So we have uptrend working higher, new high, first entry long, pull back, second entry long. Now when I was watching this today live, I was also thinking there can be some wider downtrend like this, because notice there are so many confirmations. Definitely looks valid, but we have a break, test, and visual double bottom. So it looks like the sellers are already considering this to be new extreme tested. We're so close to new extreme, so either way, this downtrend played out or the wider one played out as well. So let's see what's gonna happen. So this is a decent second entry short. Now, excuse me, second entry long. This looks great locally. Locally, this is a great setup. Second entry long, great bar. Something tells you it's gonna go higher, but because the bias was more bearish, I'm gonna mark it a little bit more aggressive. Actually, it is a decent setup. Why not? You know, this is really strong local price action. 2 legs down, massive bar, close so high. It's worth for a scalp, but the bar is big, so definitely need to use limit order. You break new extreme. So uptrend played out with to break a new high. And now you have lower high confirmation setup. So we have lower high confirmation setup off the resistance. Uptrend played out. It is a little bit steep, the bullish push. I didn't take this lower high, but no problem. This is a decent setup following price action rules. You're so far from the EMA. That's important because EMA acts as a magnet. Prices will eventually pull closer. So decent lower high. We're breaking below. Now we have a felt second entry long. Felt second entry long. But when I'm drawing this downtrend, this one feels a bit too broad. Now, this is a doji bar. I skipped this entry again. I skipped this one. And I skipped this one again. I went to see second entry short simply because I didn't like how neutral the signal bar is. I didn't like how steep this bullish push is. But no problem if you took it a little bit neutral bar. But trading is about taking a chance. This one ended up failing on you. You're getting stopped out by a few ticks. No problem. And now you have first entry short, second entry short, big bearish bar. This is a second entry short. Continuation of the first second entry long, you can argue. And this downtrend is a bit new extreme. So this is a great second entry short. Quick scalp lower. We have break. Push to a new extreme. I can't widen the channel just yet. I need a little bit more confirmation because our first one just has a break. Push to a new extreme. And prices are trending higher. And this is important. Hold on. Why prices bounced in the middle of nowhere here? You can see massive high-low push above EMA. And this is a lot of times a good sign that there is additional trend line. Because why are prices bouncing here? If I'm going to draw wider channel like this, I'm actually getting confirmations. We broke out of the trading range. We have bullish imbalance because you would expect prices to go from the top all the way to the bottom. Massive spike above EMA is giving me confidence now in this uptrend because downtrend played out to break new extreme. We entered consolidation phase. Imbalance into an uptrend. So right now the small bias is bullish. So I'm going to redraw the downtrend working lower. Quite a decent spike down first leg. So you want to see break, push to a new extreme, and we have quite a congestion. We have a second entry long here, but we have 1 2 3 4 5 6 7 8 1 2 3 4 5 6 7 8 bars stacked right next to each other, and you can see spike down. We went into consolidation. I really don't like this setup because when you have such a momentum down and prices are hovering and taking such a long time above EMA like this, this is a sign there's going to be a second leg down. So this is just so stacked, so much consolidation. I don't like taking this. And then we had decent fell second entry short, new low first entry short, second entry short failure. This one acts a little bit as a fell breakout, break below, massive push up. This is such a gigantic bar, and probably told you that all these early bulls, they got trapped, and this is now a decent fell second entry short because prices almost tested a new extreme, double bottom, pushed above EMA, and this is decent. Entry can get high low of EMA, no high low, new high. First entry long, cannot go long above bearish bar, no trigger above bullish bar, and prices reverse all the way down here. Tiny spike down, or can draw a little bit like this. Small break, new low, push above EMA, can get a high low, and no high low. We almost tested new high. As you can see, this is the highest high inside this uptrend. So we need to make a few more ticks higher, but attempt can be many times considered enough. So I'm going to be attentively observing the exponential moving average. Okay, prices are trending all the way down. I have to right now redraw the short-term downtrend. EMA is once again flattening. Move up, move down, move up, move down, move up, move down. Break. Only first entry short. Push to a new extreme. No setup here. Push above EMA. Okay, high low, but so far from the EMA I can't take it. Can I get a felt second entry short at least at the EMA? I have a felt second entry short here, but it's so far from the EMA I can't take it. I simply don't want to risk setup so far from the EMA. Prices may pull back. The reason why we're thinking buying now, because we bounce off of these lows, like EMA, downtrend played out. So we most likely expect prices to reach the new high here, especially if this uptrend didn't fully test the new high. So we need new high for this uptrend, and according to range rules, you're going from the bottom to the top, so we definitely expect prices to go higher. I can see some spike and a channel pattern, spike up, market geometry into spike and a channel pattern. We have overshoot, so I cannot really go long. At the same time, I cannot sell because this uptrend may need to get new high. Spike and a channel may need to get new high. This was too bullish. We haven't even touched the EMA. Too much bullish pressure. Prices are trading higher, so I'm going to widen my spike and a channel pattern. Can actually make it a little bit steeper like this. This is much better fitting alternative as I get more candles on the chart. Now we expect second entry long, but problem is it is getting too late that even if the second entry long is going to form, we can't really take it. We expect new high for the spike and channel, and now it's simply getting way too late. Market is about to close. This is the overall structure for today. It wasn't the easiest day to navigate because every single time you expect some setup, market just drops lower here, drops lower here, drops lower here, and there are not that many setups. But overall, it was a decent price action trading day. So I hope you had a good trading day. I'm going to wrap it up, and we're going to talk to you next time. Good luck with your trading.